Microsoft, it's a name everyone knows, right?
Yeah,
Especially if you're watching the markets, that stock, MSFT, it's always, something people talk about.
Absolutely. New products, market shifts.
Yeah,
Investors always want to know what's next.
exactly. So we're going to unpack that today. We've got Microsoft's latest quarterly report, the Form 10Q for the quarter ending March 31st, 2025.
Right. Think of it as the official report card.
Yeah, our backstage pass, kind of, to see what's really driving the numbers behind the headlines.
And it's not just about, the raw numbers. It's about the story they tell, especially for investors looking at the future potential. So this deep dive, we're really focusing on pulling out the key stuff from this 10Q: revenue, profit, cash flow, what they're signaling ahead, all from that investor perspective.
Think of this as your shortcut. We'll cut through the jargon, try to find some surprising bits, and explain what's actually going on under the hood at Microsoft.
Sounds good.
So, okay, kicking things off, what's the first thing that jumps out at you from the overall financial performance?
Well, straight away, it's the revenue growth. Pretty strong. For the 3 months ending March 31st, it was up 13% compared to last year.
13% is solid for a company that size.
It really is. And if you look at the 9-month picture, it's actually a bit higher, 14%.
Okay.
And what's important, I think, for investors is that it's not just one area carrying the load. The report says growth happened across all their segments. Broad strength.
Right, that's what you want to see, that kind of healthy, diversified growth. So the big question then, is that revenue actually translating into more profit? Is it hitting the bottom line?
Yes, it is. And that's another, positive signal. Net income jumped even more, actually. 18% for the quarter.
18%, wow.
Yeah, and 13% for the 9 months. And naturally, this flows through to diluted earnings per share, EPS. Same percentages, 18% and 13%.
And EPS is, well, it's a key metric for a lot of investors, right? It shows profitability per share. So that upward trend is definitely good news.
Absolutely. It's a core driver of stock value, fundamentally.
Okay, so that's income. What about the balance sheet? Does it show financial stability? Anything investors should note there?
Definitely. You look at total stockholders' equity, that's increased since June 2024.
Okay, remind us what stockholders' equity represents.
It's basically the company's net worth. What shareholders would theoretically get if, all assets were sold off and all debts were paid.
Got it.
So seeing that increase generally suggests the company's financial foundation is getting stronger, boosts confidence in its long-term health.
Okay, so the big picture numbers look pretty promising. Let's drill down a bit. You said growth across all segments. Where's the real engine? What's fueling these results the most?
Right, so breaking it down, productivity and business processes, that's Microsoft 365, things like that saw good growth. 10% for the 3 months, 12% for the 9 months.
And what's driving that specifically?
The report points mainly to Microsoft 365 Commercial Cloud. That just continues to expand robustly.
Okay.
But the real standout, growth rate-wise, is Intelligent Cloud. That segment surged 21% in the quarter.
21%, that's capital.
So powerful. And 20% over the 9 months.
So what's behind that? And why should investors really pay attention to this number?
Well, the report singles out Azure and their other cloud services. But here's the really interesting part for the investment story. It specifically says AI services contributed 16 percentage points to that Azure growth in the quarter.
16 points, just from AI.
Just from AI services within Azure, yeah. And 14 points over the 9 months. It really shows those huge AI investments are, actually paying off, translating into real revenue.
That's huge. Because everyone's talking about AI, but this shows it's not just talk. It's hitting the bottom line, or at least the top line, significantly.
Exactly. For investors, it validates Microsoft's position in the AI race and their ability to monetize it.
Okay. What about the third segment? More personal computing. That one's kind of a mix, right? Windows, gaming, devices.
Yeah, that one showed more moderate growth. Still positive, though. 6% for the 3 months, 7% for the 9 months.
And the drivers there?
For the quarter, it was mainly search and news advertising revenue. But looking at the longer 9-month period, you really see the impact of the Activision Blizzard acquisition.
Ah, right.
That gave a big boost to gaming revenue within that segment. So it shows, steady core performance plus the impact of big strategic buys.
Makes sense. That acquisition was definitely a major move. Okay, circling back to the overall Microsoft Cloud picture then, you mentioned strong growth there too.
Yeah, the overall Microsoft Cloud number, which bundles Azure, Microsoft 365 Commercial, parts of LinkedIn, Dynamics 365 that grew 20% for the quarter and 21% for the 9 months.
So consistent strength across the board in cloud.
Absolutely. It really highlights how successful their pivot to cloud has been. And for investors, that consistent, strong growth is it's a really solid foundation, shows ongoing demand.
Undeniably a huge driver for investor confidence. But I think I saw something about the profitability of the cloud segment,
Hmm.
the gross margin. What's the story there?
Ah, yeah, that's a really key detail. So while the cloud revenue is soaring, the gross margin percentage actually dipped slightly.
Right.
It came in at 69% for the quarter, 70% for the 9 months. And the company is pretty clear about why. It's because of those massive investments they're pouring into AI infrastructure.
Right. Building out the capacity for all that AI growth.
Exactly. They're spending big now
Yeah.
to build what they need for the future of AI in the cloud. It's a trade-off.
Okay. So that's something investors need to track. Huge revenue growth, but the cost of that growth, especially with AI, is putting some near-term pressure on the margins there.
Precisely.
All right, let's shift gears a bit. Let's talk cash. How is Microsoft managing its money? What did you see in terms of investments, cash flow?
Looking at the balance sheet, their cash, cash equivalents, and short-term investments.
Mm.
They ticked up a bit between June 24 and March 25, modestly.
Okay.
But what's more significant, I think, from the cash flow statement is the cash from operations. That saw a substantial increase over the 9 months.
And why is that?
It's pretty straightforward, actually. They're just collecting more cash from customers because sales are up, which is, a very healthy sign.
Definitely. Strong operating cash flow is always good to see. What about where they're putting that cash to work? Investing activities? Any big acquisitions lately?
Well, they are definitely still investing in the business. You see it in property and equipment, likely tied to that cloud and AI build-out we mentioned.
Mm-hmm.
But the report does show a pretty noticeable decrease in cash used for investing compared to last year. And that's mainly because there wasn't another huge acquisition like Activision Blizzard this period.
So maybe a bit of a shift in how they're deploying capital, at least for now.
Seems that way, yeah.
And what about returning cash directly to the people who own the stock? Shareholder returns, that's always a big focus for investors?
Oh, absolutely. And Microsoft is still very active there, both share buybacks and dividends.
Okay.
Over the 9 months ending March 31st, they bought back about 23 million shares.
Wow, 23 million.
Yeah, spending around $9.8 billion to do it.
Yeah.
And on top of that, they paid out $18.5 billion in dividends during that same time.
18.5 billion in dividends.
Yep. The latest quarterly dividend declared was $0.83 per share. So these actions, they signal management's confidence, and they're obviously attractive for investors looking for both growth and income.
Right. So growing the business and returning capital, that definitely paints a positive overall picture. But looking forward now, what does the report tell us about the future? Challenges, direction.
Well, the commentary really doubles down on their commitment to investing heavily. Cloud, AI infrastructure, devices.
Yeah.
It's all systems go.
Okay.
And like we discussed with the cloud margins, investors should probably expect these big investments to keep influencing operating costs and margins for a while.
Makes sense.
They also explicitly say they expect capital expenditures, CapEx, to increase. They need it to support all this cloud and AI expansion.
So sustained, even increasing investment is the plan. Any other forward-looking signs?
One thing that's encouraging for future revenue visibility is the growth in what they call remaining performance obligations. Basically, their backlog.
Ah, the backlog.
It's grown substantially.
Mm-hmm.
And a big chunk of that is expected to turn into revenue within the next 12 months.
So that gives some predictability, a healthy pipeline.
Exactly. It provides a degree of stability and suggests future businesses already lined up, which can be quite reassuring for investors.
Good to know. Now, on the flip side, any potential headwinds, uncertainties flagged in the report that investors should maybe keep an eye on?
Yeah, there are a few things. One is an ongoing legal issue with the IRS. It's about transfer pricing.
Transfer pricing. That's how they account for transactions between their own international divisions. Right?
Exactly. It's complex tax stuff. The IRS wants a pretty significant chunk of additional tax money. Microsoft strongly disagrees and is fighting it. They believe their current reserves are enough, but it's something investors should probably monitor. It could have financial implications down the road, though it doesn't sound like a quick resolution is expected.
Right, something bubbling in the background. Any other regulatory things?
They also mentioned the OECD's Pillar 2 global minimum tax rate. That actually started for them this fiscal year, 2025.
Just global minimum tax. Okay.
Right now, they don't think it'll have a major negative impact, but they're still watching how it plays out.
And just more broadly, what kind of risks does the company highlight, things that could impact the stock?
Well, the usual suspects for a tech giant, really. Intense competition, especially, they note, in cloud and AI that's heating up.
Sure.
Potential global supply chain issues are always a risk for hardware and infrastructure. Cybersecurity threats, of course, are massive and ongoing.
Always a concern.
And then there's the whole evolving regulatory landscape. Data privacy rules, and especially new regulations emerging around AI itself, that could create challenges.
Yeah.
Investors need to weigh these broader risks, too.
Yeah, those external factors are always part of the equation. One last thing I saw, a note about the CEO, Satya Nadella, and his stock trading plans. What's that about?
Ah, yes. The report mentions he adopted a new insider trading arrangement back in March 2025.
Okay, what does that mean exactly?
These are often called 10b5-1 plans. They let insiders set up a schedule in advance to sell a specific number of shares at specific times.
To avoid looking like they're trading on inside info.
Precisely. So
Mm-hmm.
his plan involves selling some of his vested shares later in the year. It's pretty common practice for executives, often just for personal financial planning.
So not necessarily a red flag, but something noted.
Right. Investors sometimes watch insider selling, but these pre-planned arrangements are generally viewed differently than, say, a sudden large sale.
Okay, so let's try and wrap this all up. For our listeners thinking about Microsoft stock, MSFT, what are the sort of key takeaways from this latest report?
I think the main picture is strong growth, pretty broad-based, but really powered by cloud and increasingly AI. That's the big engine. Now, those heavy AI investments are squeezing cloud gross margins a bit right now. That's the trade-off. But overall profitability, looking at net income and EPS, is robust.
Okay.
The balance sheet looks solid. They're returning a lot of capital to shareholders via buybacks and dividends, which investors like. And that growing backlog suggests good revenue visibility ahead.
So strong growth in the hot areas, cloud and AI, but balanced by the significant costs needed to stay ahead in that race.
That sums it up pretty well. This 10Q gives really valuable data, reinforcing that narrative of Microsoft as a leader.
Mm-hmm.
But, as always, investors need to see these financials in the bigger picture. The competition, the potential regulations, all the risks inherent in tech, especially in something moving as fast as AI.
This has been incredibly insightful, really getting into the details. So maybe a final thought for people listening. When you think about these massive ongoing investments needed just to compete in AI and what that does to costs and margins, how might that continuous spending cycle ultimately reshape Microsoft's long-term profit model? And, what could that mean for its stock valuation down the road?
That's a multi-billion-dollar question, isn't it?
It really is something for you to think about as you watch these trends and make your own decisions. Thanks for taking this deep dive with us today.